You're listening to chartingwealth.com for Friday, the 4th of December, 2015, as we move toward the end of the year. Let's take a look at what's going on. We see that as a result, allegedly, of the European Central Bank not being as generous in its stimulus package as investors and the markets had hoped, what happened? Well, see, when there's no free money to support the market, shouldn't the market be supported by actually people making money? No, not in today's world. That's why, my friends, it's so important to pay attention to these charts. That is why in this inverse world that we live in, if you want to be able to make money in the market, you've got to follow these charts. Be nimble, be quick, pay attention to what's going on, and be able to react on it. What do we have happening? We have a huge plunge on the two-day candle for the third, which really reflects what went on mostly during the course of the day. That is for the total market IYY. If we jump back to the 4-hour chart, we can see something was going on yesterday when we reverted over going down, across the MACD going down on the 4-hour chart, and then big down moves, first in the morning and then even more in the afternoon. Went down a lot further, and then the bears were able to pull it down a lot further. Bulls were able to pull it back up. That's how the markets ended. Now we are a confirmed down move on the short chart and a confirmed down move on the large chart. We had drug along. We had talked about sliding sideways, and then we saw the drop off the edge happen. Now, let's go from the Qs, which is again, the total market index fund. It represents the whole market. Let's go to a big chart, but not as big as that. It's the S&P 500, but lots of volume. It's the big companies. What do we see there? It also reverted over, actually on the last two-day candle, so it was already in a confirmed down move. And what did it do today? It further moved down. Now, if we look back at the 4-hour chart, we can see that it already had telegraphed that to us when the market closed yesterday with a reverse, a move over down in the 4-hour chart, and then the plunge throughout the course of the day. So we're in a confirmed down move on both our total market and the S&P 500 in both the long chart, that is the two-day chart, and the shorter chart, the 4-day or half-hour chart. Lastly, we're going to move back to our two-day chart. We're going to look at the Qs, QQQ, which what is that? The cubes, it's also called. That is the NASDAQ 100. What has it done? Well, it's actually now, it is rolled over, confirmed down. Actually, the Qs had moved over, going down back around the 2nd, and it confirmed all of that. Well, actually before the 2nd. It rotated over on the 30th of November and on into December. Moved up some yesterday, but if you recall, we talked about how it had already reversed itself. Even though where there was an up move, it actually had already reversed itself in the MACD. So that was a concern we spoke of. We've clearly crossed the two-day moving average. If we revert to the 4-hour chart, what do we see? Well, we see, of course, a crossover this morning on the 4-hour chart. This morning, by that I mean the 3rd of December, and then a big move in the afternoon. Almost twice as much of a move down in the NASDAQ. If you look at there's a bottom wick on our candle, but then pushed back up by the bulls. So it could have been a lot worse than it was. Frantic selling, and of course the crossover in the afternoon of the two-day trend line. For the record, the IYY was down 1.48%, S&P 500 down 1.41%, and the NASDAQ 100 or the Qs down 1.67%. Now, how do you think the impact of the markets going down on that lack of stimulus, less stimulus than people had wanted from the European Central Bank, how do you think that affected gold? Well, we can see a tightening up in the MACD. That means the moving average convergence divergence line is getting closer to the signal line. We also see the derivative oscillators lost a lot of its speed. We still have gold's price below the two-day moving average. But what do we see when we look at the 4-hour chart? We see gold not doing much in the morning at all, sort of stalling out, and then reversed up. We had a crossover going up in the morning and then confirmed even further in the afternoon with the derivative oscillator going from positive to negative. Now, if you've been paying attention the last few days, last couple of weeks, our crossover back on November the 12th was not the typical crossover we see going up in gold. It actually slipped sideways and dropped significantly. Then we boosted over going back up again on the 30th of November. And what happened? It slid sideways and then dropped down. Now it's tried to pop back up yet again. We are not feeling good about our 4-hour chart as we had been in the past over many months where it had been such a good chart for us. So we're going to see if it returns to any reliability. It has not for the last couple of turns for the first time in many months. People sometimes say, how long do you count on a chart? As long as it works. And it had been working like crazy, but it is not working at this point, and that is most disturbing. Now, that is where the markets have wrapped up as we go into Friday. Let's see if those down moves continue in the big charts on the indexes. And let's see if the up move in gold. Technically, gold was up 1.07% for the day. That's where we are. Hope that you've had a good week in trading. Thanks so much for joining us. Be sure to follow us on Facebook and Twitter. You can also find us on Instagram and YouTube. Please be sure, if you would like our How to Read a Stock Chart video and you would like our charting layout, all you have to do is go to chartingwealth.com and sign up for a newsletter. You'll get our weekly review and forecast. Once a week, you'll get our daily chart reviews, and you will get, at no cost to you, a link to the video that is you're going to love, and in addition to that, the charting layout that we use at freestockcharts.com. Thanks so much. God bless. Hope your week ends well, investing and trading. Thanks so much from chartingwealth.com.